The actual truth is, if you've got exponential demand and limited supply, you're going to get an exponential rise in price. I looked at this and said, not until ETH 2.0 comes out is this going to change, because everybody's going to stake. Not correlated. Why? Because it's a network effect asset. It's different. It's not just a rare asset. It's a rare asset with network effects. Okay, we haven't seen any of these before. Well, you can trade a cycle, and that's okay. You can trade a cycle. If you want the dirty truth, you should never own Bitcoin. The actual truth is you should own alts or stablecoins, because when Bitcoin outperforms, it's generally when the markets are falling, and in which case you shouldn't own Bitcoin. You should just own stablecoins. And when the markets are in a bull run, generally the alts outperform, particularly the large alts, so like Ethereum. And therefore, at that point, you should own those. And maybe you should never own Bitcoin. Now, that's the extremity of the whole thing. So my view on this is, I think the space goes, the market cap of the space goes up 100x from here over the next 10 years. So call it from 2 trillion to 200 trillion. I mean, that's ludicrous. We've never been faced with an asset class that does that in all recorded history in a period of time like this. Because you don't really want to sit for 2 years not making money. You might be able to make money in other stuff. But, you know, generally speaking, you want to keep some into it. And, you know, some people will keep all into it. I won't. I will take some off the table and do other stuff. And I will then look for the time to get back in again when I think it's going on its next move. Now, maybe we've eliminated the cycles altogether now, and that it's smoother and it trades sideways for 2 years. That's possible too. I don't really have a view, but I won't be 100% my net worth the entire cycle. I've been saying this for a while. People are so blinkered in what they see and know, and they hate anything that is change and different. But Elon Musk and Mark Cuban spotted this early on. It's like, okay, people want to trade this because they feel an affinity to this, and it's kind of speculative, but it was a joke, kind of like GameStop was as well. But people started making money and it attracted other people. Suddenly, you had a cryptocurrency worth $40 billion with millions of investors. Well, that's one half of a network. All you have to do is create use cases. So Elon made that pretty clear that actually this is a pretty interesting thing, because anything that's kind of memey can have money because people attach a value to it and they enjoy using it. And it's not like Bitcoin that you just lock it away. It actually feels like it's a transactional currency. Mark Cuban said the same thing. He started accepting his payments, and now they've kind of got the gang back together and they're going to try and build this out into a meaningful cryptocurrency. And you know what? It's got a decent probability just because of how many people like it. And this is this weird new world we're walking into. It's not a world of one money. It's a world of multiple monies for different use cases. I mean, it's hard to get our heads around. We don't know where it's all going, but it's not going where we all think it's going. It'll go somewhere wildly different. I don't think it's correlated at all. I think the only correlation, occasionally, there's passing correlations, but they don't last. The correlation generally is central bank printing tends to rise all asset prices. So of course that features in Bitcoin's price, as it does in gold and equities and real estate and art and all these other things. So that's probably one of the larger drivers, but it's not correlated. Why? Because it's a network effect asset. It's different. It's not just a rare asset. It's a rare asset with network effects. Okay, we haven't seen any of these before. This is why it keeps confounding people in how it moves. Network effect rare assets never existed before. Yeah, the 80-20 rule. I mean, this is like the dot-com boom. How many survived? Not that many. But you know, yes, it's okay to play with these small ones, but you need to know what you're doing, or just take a very small position and realize that you're hugely speculative. You're trading penny stocks and they can go bust at any time. Or you can build a proper portfolio and think about risk management and understand that not all of them will work as well as you want, but you're going to only get involved in the top 30 or 40 coins, and then you may take an individual bet because you particularly like Audius or something like that. So see the onboarding, you know, NIDIG, all they're seeing is wall-to-wall requests, incoming, onboarding, It takes a while. People don't understand that, you know, for institutions to go, oh, well, we're going to buy Bitcoin. Okay. How do you mark to market it? What is the open? What is the close? Which price do you take? There's no single exchange. Then how do you custody it? How do you account for it? All of this stuff takes months of work. I wrote an article saying the greatest trade. And basically I looked at Ethereum, looked at the on-chain data and realized that, okay, we've just gone through the EIP 1559. So that's burning ETH. Then I looked at, okay, on-chain, what's going on? Well, there was a huge amount that had been taken off exchange, an enormous amount that had been staked for ETH 2.0. There's a massive amount that was also in DeFi locked away, and that left 13% of the entire supply available on exchange. And yet demand was exponential. So if you've got exponential demand and limited supply, you're going to get an exponential rise in price. I looked at this and said, not until ETH 2.0 comes out is this going to change, because everybody's going to stake, because there's no point not staking until that moment, right? Because the ETH price is going to rise. So everyone's incentivized to stake or to take it off exchange, and there's no supply and it's going to keep falling. And they're burning ETH. I mean, holy shit, you never get an opportunity like this. I'm like, this is better than Bitcoin was in March 2020. This is a monster. Purposefully, firstly, I saw the vitriol of the Bitcoin community when I, in October, started saying the ETH chart looks pretty interesting and ETH Bitcoin chart looks interesting. People were angry. They hunted me down online, you know, and I was like, that always makes me, if somebody says I'm an idiot for looking at something, it makes me want to look at it. And the assumption was from the Bitcoin community was Bitcoin was special, it was the only one, and it was driven by store of value, and everything else was a shitcoin. So then I started looking into Metcalfe's law, and I realized that Bitcoin and Ethereum were priced off exactly the same mechanism, as were all of these tokens. And that it wasn't special Bitcoin in how it was priced. It was basically the number of users. And, you know, yes, Metcalfe's law is the number of users and basically the interconnection between those users. And I looked at that and went, oh my God, well, Ethereum's just launched DeFi and NFTs and all of this stuff. So there's a lot more activity going on the chain than there was on Bitcoin. And that made me start to pay attention. Then the chart started breaking out. And then I realized that the breadth of what was happening, the speed of the growth of the network in Ethereum was twice as fast as Bitcoin. So it was likely to grow twice as fast as Bitcoin in price. Simple as that.